Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 23rd of August here in 2022. And we can update that the market has taken the downside path. Remember we talked about the Gandalf, which is this far and no farther, or to be specific, you shall not pass. And the market did not pass that 43.50 or thereabout level. And we are seeing, again, that was the framework, the risk to the upside and the reward to the downside. That's going to be true off in the S&P. We'll talk about some of the main sectors, but just to get the video started. And in the Nasdaq, that's down from just shy of that 14,000 level. And in the Dow Mini Futures, just shy of the 34,500. 34,400 will be, or 34,000 will be a key reference point to reflect there as it trades down. And the small cap Russell index. So let's keep that theme in mind as we talk about some of the sectors and the performances in some of the leading stocks. Back to the big picture about this far and not much beyond that. Financials XLF has turned down, and that's against that 36 double top level. That's a resistant sell side activity. Technology XLK is going to be our broad sector for the likes of Google and Microsoft and Intel, etc. But they had their turn down. Again, short sell bear type position will be down against the upper resistance, and that plays out just in the next few sessions. That's XLK. XLY, similarly, again, just put this in context about the S&P 500, which is the broad market index, had a test or touch a stronger than expected rally, and those days right there were the ones that were unexpected. They were risk to the upside. 1, 2, 3, 4, 5. And the market had a good shot to turn down from the 4,200. Well, that didn't happen. The market came up into the risk area and then turned down. But the same logic is playing out in these major ETFs. And that was true up against 175 in the discretionary. That will include Amazon and Tesla and some of the retail names. Next up is industrials, which again pushed up a little bit higher into the risk zone, but then turned down. And the other comment we'd like to highlight or show is the same logic did take place into March, into April, this much and no further beyond it. But the market did trade down and did go beyond that before turning lower. Industrials, similar logic. Materials are a little bit stronger and they just have a sideways trading range, but the key sector or the key stock sector here, we'll see this in crude in just a moment, was up almost 4% today. XLE is the energy sector, and you can see how some of the leading stocks in the S&P 100 today, and this is true off the open, were ExxonMobil, Chevron, Texaco, and ConocoPhillips, because the energy sector was up because oil was up again. And that again was about 4% earlier in the session. So XLE is not in a downtrend. It's actually an uptrend with higher prices and a push off of support, not resistance, into that one ETF. Now we can talk about the others, which are defensive sectors or protective, or you might hear the term risk off. And that would be XLP for staples. Staples also is not in a downtrend. It's a sideways trend with the resistance about 77.50, almost 78, which is right here, and a target down to about 74 for the midpoint. Think bell curve distributions, or the overbought, the oversold, and the midpoint being fair valuation. That will play similarly to the healthcare sector XLV. And it had a turn down, not from the high, but from the middle, and that was 134 per share. And the big one, which is making new 52-week highs, is utilities. And to an extent, these serve for a small portion as we might think about the bond market, which gives a high dividend, think high yield, but that will be coming up with the interest rates rising, so that might not be as an attractive place to park capital in the long term. Nonetheless, XLU utilities is the only sector, not including energy, and energy did not go up to the high, to have made a new 52-week high and now coming back down from that. So the main idea here, the main discussion point is that while the market itself is in a continued downtrend and bearish on the big picture, some of the sectors are a little bit stronger and they are in different trends. Those would include, again, utilities at the high, energy, which is more so bullish, staples a range, healthcare a range, and the others would be downtrends with the market. So a split type of market. Now, we discussed crude oil just a moment ago, and it has a bounce. We'll see this on a little bit bigger perspective. Is the inflationary concern, or has been at least with some other commodity prices. So XLK or XLE energy sector goes right along, generally speaking, with the CL or crude oil. Not a one-to-one, but generally speaking. And these have been on the upswing since the lows of 2020. And that has been our inflationary push. Again, just to be fair, we'll look at wheat on the futures account here in Thinkorswim. That's ZW. And we see that it also, there's your 2020 low, and that skyrocketed. Other factors did contribute to that, but other commodities were in play and were rising, and that's just the consideration of inflation before the pickup and just recently the cool down. So wheat prices, just to name one commodity, have had a stellar rally, but they have also pulled back. And that is true with crude oil as well. And that's where the market is a little bit split or different. Gold, which is seen to be an inflationary commodity, but not in the last couple of years, has actually been sideways. It too has a trading range and continues to be between 2,000 per ounce and about 1,700. That makes the midpoint where we just saw the market trade into just above the 1,800 per ounce level. And now the bond market, which continues its downtrend and making a push a little bit lower. That's right alongside with what we are focusing on in the yield market, or the 10-year Treasury yield, which trades right back into 3% on the 10-year Treasury note yield. And that, again, you can see that on the other side, tradable in the ETF, or with respect to the yield, which is rallied. And that has put pressure, all this together, has put pressure on the equity market, the Nasdaq in particular, which is the technology-centric sector. And on the other side, the dollar, the US dollar index there, has achieved its target. And the target is just a swing up to the prior high, only because this is an uptrend with higher highs and higher lows in the US dollar index. And the bull flag trades, bullish type trades, have been the successful plays. And the most recent one completes up into the prior high. With that target hit, we might see a pullback. So that's something to watch in the remaining days of this week. So will the dollar pull back or retrace from 109? Speaking of the remainder of this week, in terms of earnings, which stocks are in play? One big one, and that'll take place tomorrow. That's Nvidia. So we'll take a quick look at Nvidia, which will have earnings after the bell on Wednesday. So it came up to this much and no more, just shy of 200 per share, about 191 or 192, and that is traded down from that resistance spot. Again, think about the Nasdaq. It's a little bit weaker, but with all stocks hitting resistance, or many stocks hitting resistance, Nvidia is just one of those and has traded lower from its resistance point we had highlighted a little bit earlier. CRM Salesforce.com, it has earnings, but that might not be as big of a play as something like Nvidia. Nevertheless, it does have 100% implied volatility with a $14 expected move. That's just in the earnings play, so we'll need to update that later in tomorrow's session. Nvidia does have a 91% expected move or implied volatility, which gives an expected move on the earnings base. As of now, we'll update this on Wednesday, but that's about $11 of potential movement in the stock. And one other thing to watch before we conclude tonight's video and get back into Wednesday's session and get ready for Wednesday's session. That would be the Federal Reserve. We call it Jackson Hole, but Jackson Hole is their meeting place there in Wyoming. And the chair, Jay Powell, will give a presentation or a speech, update on the market, update on what the Fed track is and what they've discussed, and what they see about inflation, about interest rates, and etc. And it could very well be a market mover. We will also have consumer sentiment, which will come out, University of Michigan. That will come out at the same time. And there are other information, for example, we'll look at retail inventories, personal income, and that would be one to watch as well. So inflation data may come off of this and other informative or economic reports. That will be there on Friday, but we aren't there yet. We're getting ready for it. So we are only on Tuesday. Wednesday, Thursday, and then Friday will be those big reports. And we'll continue watching our markets in the SPX, the Nasdaq, other ETFs, as the market does reject or trade lower from our resistance points. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for August 23rd, 2022.